Good morning, everyone. This is Ahmed Nejm, Head of Corporate at Mashreq Egypt. صباح الخير على جميع المحاضرين والمشاركين معنا. Thank you for joining us today for this webinar. I hope you are all safe and sound. On behalf of Mashreq, I welcome you all to our today webinar about assessing the international debt market in changing time, with special focus on Egyptian borrower and issuer. As you all know, international capital market has experienced a significant volatility over the last period due to double effect of the pandemic and the oil price crash. So the agenda of this webinar will be focusing on current funding trends in the Egyptian credit market and how Egyptian borrowers can meet the opportunities and challenges of assessing the international debt market. Following the discussion, attendees will have the chance for Q&A. Now, without further ado, I will turn the time over to my colleague, Mr. Walid Amri, Senior Director of Debt Origination, and Mr. Aditya, Head of Debt Market Capital.
Thank you, Ahmed. Welcome, everyone. Hope everybody is safe and in good health. Thank you very much for joining this webinar. We hope that you will enjoy listening to it as much as we have enjoyed putting it together. So let me start with the agenda. We will go through the four key steps through this webinar. We'll start with a historic perspective just to give you a sense of what have been the trends over the past few years in terms of Egypt accessing international debt capital markets. Then we'll tighten a little bit about what's happening currently in the international loan market in terms of how Egypt is accessing it in a post-COVID era. Aditya will talk about the DCM angle, and we will close with a key takeaway slide at the end of the webinar. At the end of the webinar, everybody will have a chance to go through a Q&A session. So if you have any question, you're most welcome to post it on the website, and my colleague Karen Bansal will moderate the Q&A session at the end of this 30-minute webinar. So really the first slide that I want to walk you through is about the historical perspective, and we just wanted to step back a little bit just to give you a sense of what have been happening on the Egyptian market over the last few years. Clearly, the base year here is 2016. That's the year where the IMF agreement has been sealed. That's the year where the Egyptian pound has been floated. That's the year where the government has started implementing the agenda reforms in terms of the policies. And so starting from 2016, we see a nice trend of volumes picking up. So the upper chart shows the bonds, and we can clearly see 17, 18, 19 volume of bonds picking up. For example, 2019, Egypt has been the largest issuer in Africa. 40% of African issuances came from Egypt. Also, the other key point to note is the longer tenors. So in 2019, for example, Egypt has issued its first 40-year bond, and that was oversubscribed. The key point to note here, and one can't help but notice the absence of blue in the top graph. The sovereign is the only issuer in the bond market. There's virtually no corporates. We will talk more about this throughout this webinar. My colleague Aditya will talk more about it. On the loan side, and if we look at the lower graph, of the slide, the same theme of increasing a pickup of volumes in terms of loans from 2016 into 2020. Again, a testimony of the resilience of the Egyptian market in terms of implementing macro reforms, and in terms of the positive story that the international markets are seeing in Egypt. A lot of DFIs, a lot of multilateral agencies are financing project finance, CapEx, and on the back of that, a lot of DFIs have invested heavily into the Egyptian market. Of course, also regional banks from the GCC are also part of the lenders, contributing to this pickup in volume. Over the next slide, we will see, we will still stay on the same time scale. However, we'll go through the currency mix. And please look at the top chart. You can see that the orange color is starting really from 16 onwards, and we have a nice healthy mix, of foreign currency and EGP on the bond side, starting 2016 into 2020. A key point to note is that Egypt has been the only country in the MENA that has not been downgraded by the rating agencies. IMF is also forecasting a 2% GDP growth in 2020 when everybody else in the region is going through a recession. Again, a true testimony of the Egypt story. Last month in May, Egypt had its largest bond issuance of $5 billion, and that was oversubscribed. This happened in the middle of the COVID-19 crisis. Again, a plus point on the bond side, on the bond story. The lower chart on the loan side, there's still also a good mix of foreign currency in pound. We don't really see much of the pound. I think this slide really shows the pound transactions that have been syndicated outside of Egypt. There's not much, but the pound market, loan market in Egypt is thriving. As per Bloomberg, NBE, along with the other tier 1 banks, are arranging more than $5 billion of syndicated loan EGP loans in the local currency every year. And of course, regional banks present on the ground are also contributing to that number. So still we are seeing a good story on the loan side in terms of the currency mixes, dollars and pound, over the last few years. The next slide will talk more about yields and interest rates. Still over the same time period of 2013 until 2020. The top left chart shows the strength of the local currency rate at 15%. So this has been clearly driving the carry traders into the market. Most of the T-bills in local currency are attracting a lot of the carry trade. The Egyptian pound has been resilient against the dollar. The currency has actually appreciated over the last few years. Yes, with the recent rate cut from the central bank from 13 to the 10%, we anticipate that this carry trade will ease up. However, we'll still see a lot of inflows into the market. So the differential between the dollar spread and the Egyptian pound local currency spread is staggering. It's almost 10%, and this is how it's reflecting into the carry trade of the market. The right side of this slide is about the CDS, and we can see that when compared with other countries, Egypt enjoying a better rating than them, and so their CDS is reflecting that, with the CDS at lower level, still factoring in liquidity risk for Egypt. However, we still see a lot of appetite, and these levels reflect a good risk return for an investor investing in Egypt in terms of the CDS over the next 5-year period. The lower part of the slide is really to compare with a few peers. So we have picked up a few countries based on population side, rating, GDP growth, and when we can clearly see Egypt dominating the African continent in terms of 2019 issuances, there's still a lot to do on the corporate bond side when compared with Asian countries that issue much more. Let me switch to the next slide, which will further kind of focus on what's happening today in Egypt and what we have been going through over the last quarter. So the last quarter, of course, has been a bumpy ride, to say the least. We have been really surprised by the strength of the market, especially domestically. So I think there have been quite a few measures that the government took very quickly. Egypt has been one of the very first countries to implement these. I think at Mashreq we believe that the key advantage of Egypt here has been the population size. 100 million people is 100 million consumers. The government has been very quick in pushing ahead liquidity into the system, $6 billion of fiscal package. A lot of moratorium, 6 months moratorium has been also allowed for the manufacturers, liquidity for the SMEs, tax relief also. So all these COVID facilities have helped a lot and have fueled consumption amongst these 100 million consumers, which have been keeping the Egyptian market afloat. However, this situation have probably showed a few of the challenges and weaknesses that are faced, by the borrowers on the ground. The key one to note is, of course, the concentration limits of local lenders that are hitting their caps. There's also an over-reliance on the concession money coming from the DFIs and the multilateral agencies, less so to the commercial banks. And of course, there's a lot of cash burn. People have been, trapped in a kind of short-term liquidity crisis because most of the liquidity on the balance sheet of Egyptian names, mostly, there are, of course, a lot of Egyptian names that have very healthy balance sheets, but quite a few are very short-term and uncommitted, which has created the need, to term out some of the exposures. And because of the cash burn, companies were unable to meet their maturities. So the right side of the slide really tries to capture the key themes, of this COVID-19. It's clearly a story, an improving story. Of course, we're still fighting the pandemic. Egypt is fighting the pandemic. Most of the world is, but a few lessons learned from those 3 months of cash is king. Liquidity, even if it's expensive, has to be sought. Liquidity more on the medium term should be privileged as opposed to short-term liquidity, even if it's at a higher cost. We have seen a lot of M&A opportunities because of lower valuations. So these also have been on the cards for quite a few players to acquire. So acquisition finance has been also a focus area, although most of the companies are not really in a spending spree because of uncertainties and possible volatilities in the market. So the next slide talks more about the key drivers that we see in the Egyptian markets, and let me give you a number here. $10 billion. $10 billion is the volume of EPC contracts that have been signed in the first quarter alone in Egypt. Every year since 2016, Egypt has been increasing its foreign currency EPC contracts signed, almost doubling when compared to the pre-2016 era. So right now we're at almost at $25 billion annually. This just shows the sheer need in foreign currency of the country, especially fueled by the project finance, infrastructure projects, the entire gamut of capex and growth that the country is going through. That is also coming hand in hand with the reform program by the government and the ministries. So a lot of foreign currency requirements, combined with a need to control the costs. And clearly we have seen a lot of borrowers in Egypt trying to capitalize on the cheaper foreign currency cost versus the local currency cost. We have helped a few subsidize their expensive local currency borrowings with foreign currency. Of course, some of them are able to do that because they can hedge the currency risk with their export inflows of foreign currency. But we are still seeing a few players willing really to look at hedging the FX risk through FX transactions without having the benefit of exports and foreign currency inflows. So the story really here is about how to diversify liquidity, and the key driver for international lenders to come to Egypt clearly here is the diversification. So an Egypt borrower, we believe now, should really focus on diversifying its funding pool. From a GCC market, we see a lot of appetite. heading towards Egypt. There's always a feel-good factor about Egypt when we're sitting here in the GCC. There's availability of country limits in Egypt. It's seen, the Egyptian market is seen as a good risk return balance. We saw it on the CDS, which gives a nice 5-year curve. And there have been quite a few good corporate stories in Egypt that could very well, come out and, try to raise medium-term liquidity. We actually helped quite a few names to do a non-deal roadshow in the GCC, which have led eventually to successful transaction later on. So really, we believe that Egyptian borrowers should capitalize on this, and it's of course always a story of positioning. One should always position themselves. Some of the key favorite sectors we see of GCC investors or GCC participating banks, clearly the infrastructure sector, power and water, oil and gas also, despite the drop in the oil price, we still see a lot of interest, especially in the midstream to downstream petrochems as well. Manufacturing sector is also a key driver. Telecom, of course, one of the key sectors driving appetite from regional investors. Let me now move to my favorite slide, actually. A very colorful slide, as you can see. Really here we wanted to, go through a case study to really show you what is the adventure that one borrower in Egypt could go through, and the key milestones to improve the capital structure and reach a certain permanency in its capital structure. We believe this is key. The COVID-19 period and this pandemic outbreak has taught us one thing is, we need to diversify. We need to think medium term and not short term. We need to think of how to make our capital permanent or reach a more permanent capital structure in terms of currency buckets, in terms of product buckets between bilaterals, multilateral, also club loans, DCM, between tenor buckets as well. So clearly, the left side of the graph, the dark green, shows one borrower that could be really in a silo of local bilateral type of liquidity, which is really constrained, short-term, mostly working capital, uncommitted, secured with hard security like real estate or land. So we believe that there is, of course, benefit in moving away from this towards a platform where there will be a combination of local bilateral with foreign currency club as opposed to a bilateral, more medium-term kind of borrowing base. Eventually, less of fully secured, more on the cash flow side of the business, and to effectively diversify the liquidity pool. Gradually, one could eventually move into the DCM play, and here clearly, yes, it's probably a matter of getting a rating. There will be also more disclosures. Probably these are one of the key factors that have been deterring some of the names to come to the DCM market. Probably too much of disclosures, a perceived higher cost of the bond market. I will let Aditya further develop these themes, but of course, we believe there's a great advantage in tapping the fixed income market, especially securing 5-year bullet type of money, which would lay the ground for a medium-term capital structure, to finance capex, to finance more longer-term kind of requirement for the company, while keeping working capital or more of club transactions for RCFs, which would be more kind of 3-year on a rolling basis, and these could very well address the short-term requirements of the names. So this is the kind of permanency of the capital, trying to adapt the business cycles of the company with the vast gamut of products across the IB in terms of DCM, club loans, syndicated loans, across the currencies, across the tenor buckets, from 3 to 5 years to longer term. And of course, the last part of it is really about the equity ventures and how borrowers could enhance their return on shareholders could enhance their return on equity, could reduce their cost of equity by diversifying, the equity play. And here again, Mashreq would be happy to help. We have an ECM shop as well, and we have been, looking at some interesting structures with, the various stakeholders. Let me now hand over to Aditya to go through the DCM story.
Thank you, Waleed. Thank you, Ahmed. I'm so happy to be back on the webinar series and privileged to talk to you today. I think while we spent some time thinking about this presentation, I think we intentionally titled this section for obtaining access to the global debt capital markets. Just everybody knows that the DCM market is the deepest pool of liquidity, and in line with some of the themes that Waleed was mentioning, accessing that is not just for the points mentioned on the earlier page, but it's clearly a case of diversification. It's clearly a case of achieving permanency in capital structure, and it's not a myth. And I think the next slide, when we get to it in a second, it just talks about how we're meant to see the evolution of the capital structure going forward. I think we have taken as Mashreq, and we are working with quite a few issuers who are seriously considering this market as a primary option, not as a fallback. And there is a lot of effort that's been put into it. But for the naysayers, what we tried to say and what we tried to show on this chart is that capital structure is evolving, and we tried to depict a 10-year split across two 5-year windows where we talk about the sovereign, we talk about the corporates and the FIs, the entities that can access this market, and we've compared that Egypt and its entities versus another country which is similarly rated, similar size, and definitely well liked by investors. As Waleed mentioned earlier, the sovereign, the Egypt sovereign, clearly has accessed the market. The size that it has been doing so with has been growing, as you can see in orange. Orange represents the bond side, while blue is the loan format. And you can see in the middle of each circle the size that's been achieved. It's growing for the other country on the bond side, but generally speaking, the sovereign has accessed this quite well. But as we move further down the chart and we look at corporates and FIs, you will note that the loan side is heavily dependent for Egypt, while the other country and its corporates have slowly and steadily over the 10-year window have increased the component of DCM as much as 53% on a YTD basis. So that just shows you that it is not a myth, but it is something that is going to happen even to Egyptian corporates. Similar stories on the FI side or the bank side. A lot of focus in that other country on the loan space, and that chart has completely gone on its head and become very dependent on the bond side. This is just a case of thinking about what you need to do to your capital structure. How do you achieve the permanency that's required, as opposed to considering it as a amortization-based capital structure at all times. If I were to take you to the next page, if I've got your attention and you recognize the need to access this deep market, we tried to list a few things which would be the building blocks that every corporate or FI should be considering while you actually think of going to this market. We call these the building blocks, but in essence, there are many more items that we could have listed, but these really are the key that any issuer or proposed issuer should be considering. We've worked with lots of issuers, many debut issuers that are taken to the market, and these were the key things that we always guide them to think about. I think at the end of the day, your customers or the investors that would buy your paper are eventually going to look at credit quality, just as we would in the on the loan side. So credit quality on the left-hand side reflects all the internal aspects, and credit quality being one of them. I think that you need to be of a certain size, scale, defensiveness of cash flows that are super critical before anyone can lend you long-term money. That's a given. But more internalizing and more internally, the things that we need to focus on were, is the management committed to taking the path of accessing the market? Are they willing to spend the time? And remember, as advisors, we are always there to guide you through this process, which is new. We've done it, dozens of times, but the strategic focus has to come from management. And I think there has to be a deliberate time spent, which will go to access that market. As you think about the strategic focus and the commitment, that trickles down into governance, transparency, corporatization of the company or the FI to make sure that investors that probably lend you money for 5 years on a bullet basis would like to hear more about your company as time progresses over the next 5 years once an issuance is done. So that's crucial to make sure all those aspects are well embedded as part of the internal mechanism of the company. Waleed spoke about disclosures. They all come through here. As you think about it and as we prepare you to access this, it's not a very demanding market. It's just par for the course. And definitely once we get there, you will see that happening quite obviously and easily. Now, there are certain things on the right-hand side which are external, such as the credit rating. You have the 3 agencies that typically investors globally rely on, Moody's, S&P, and Fitch. Many of you are already in discussions. We know this. We are helping you with that. But it's just another sheen that investors would like you to have, that you've gone through the process and that an external agency has vetted the credit quality, which we and you would obviously believe in before we take you to that market. Legislation and regulations such as sukuks require certain regulations, which obviously we've seen in the local currency market with a few issuances that have happened over the last 6 months. But essentially, the ability to access dollars, the ability to raise money eventually will change. And therefore, we expect that the government will support as the market grows, as the credit appetite grows. You will need the capital from external sources such as these investors. I intentionally mentioned loan market recognition, and the sense behind that was, as you start accessing the international markets, you will have international banks working with you. As the number of banks that you deal with grow, the confidence of having done all these syndications comes through when management talks to investors who they've never seen before. Banks are supportive because they're confident that you can access that market, and they have the faith as well. That shines through in the demand that's generated for your paper, the confidence in which we can tighten price, and obviously the demand that gets generated from investors as they see banks such as Mashreq and others taking you to that market. Market conditions is timely. Obviously, in times of COVID, although the US global high yield as well as the IG markets are on fire, market conditions play a very critical role. You obviously can't go to the market at any time. There is an opportune time, but as I mentioned before, it's an external factor, and us banks who will help you will always be watching for the right window to take you there. So if I were to summarize what we've spoken about on at least this section, is that you are definitely going to access or need that liquidity. It's going to take time. The earlier you sit back and say, okay, we need to do this, you give it the strategic focus and commitment, I promise you, you will be well liked and extremely well demanded from that fixed income investor base. Let me stop there and hand over the mic back to Waleed to take you through some of the takeaways that we've spoken about so far.
Thank you, Aditya. Very insightful. So as the key takeaways for this webinar, and we hope that you enjoyed it, I'm just trying to wrap up and summarize before we move to the Q&A session. Look, the phrase I wanted to start with is what doesn't kill you makes you stronger. And I think this is very valid for Egypt. True, the pandemic outbreak has kind of slowed the pace of this fantastic progression that we have seen, but it has not, we believe, reversed the trend. We believe that still the Egypt story is fantastic. Honestly, from a growth perspective, it is absolutely fantastic to see such a population size, such a country looking forward to the future with so much of projects, hope, dreams, things that they want to achieve. And how the world is looking at Egypt, I think, is also extremely positive. And we are really witnessing it sitting there in Egypt on the ground, but also outside and looking at how people are investing into the country or having appetite to lend into the country, so whether on the bond side or on the loan side. So the story is very positive. The COVID-19 have slowed it. We believe that this will only spur more reform, and so we clearly see a positive path going forward. It's a story of resilience, inclusivity, and sustainability. There's a few, I think, actions that every Egyptian borrower could take to diversify its liquidity pool, to eventually look at the permanency of its capital, and we have seen that. We are here to help. We would be glad to, take you through a non-deal roadshow or look at, the capital structure of every borrower and see how it could be enhanced or improved. Clearly, we see the pipeline for the end of this year as very strong. So we're happy to engage with the stakeholders, happy to engage on any M&A opportunity, any capex opportunity, any reprofiling opportunity. Happy to look at any refinancing as well. Happy to kind of walk you through the various stages. We believe that the key focus areas will have to be also about governance. It will have to be about ESG. It will have to be about digitization of the businesses. This is a new keyword that we are still, we keep on focusing, and I think the pandemic has even increased, the importance of digitizing businesses. And of course, what every crisis, teaches us, I think, is to be even stronger, to, think of the future. And, we don't know when this will end. There could be a second wave. There could be a new virus that we are not expecting. So the best thing is to be prepared. And I think we are now better prepared versus 3 months back. And again, happy to engage with you on the Q&A and offline after the webinar. So thank you very much for attending. And I'm going to hand over to Karan, our colleague, for the Q&A session.
Thanks, guys. That's a very comprehensive and perceptive review of the Egyptian debt markets. We've got quite a few interesting questions. So just getting right into it, the first one, Walid, perhaps for you. Given your experience across various markets, debt markets, how do you really see the Egyptian market in comparison to the more active GCC markets like UAE or Saudi?
Thank you. Look, to be honest, clearly one of the key, and I think I mentioned it also, one of the key advantages of the Egyptian market is the captive domestic demand. 100 million population. Clearly, this is a very key advantage when you look at other countries, especially in the GCC. There's also another factor, I would say, the less of reliance on the oil and gas. The Al Zour gas field discovery over the last few years have, of course, improved Egypt in terms of, being less, dependent. But the Egyptian economy is, I think, more diversified and less relying on oil and gas, which is a positive point as compared to other GCC countries. So I think these two factors at least are very positives and would at least mean more appetite towards Egypt in case of raising any debt capital markets going forward.
Sure. Thank you. Quite a few questions, and again, clearly we've got quite a few CFOs on right now. Maybe that's for you, Aditya. Remember the colorful slide that Waleed showed, which talks about the evolution of corporate across its cap structure. What would be your key pieces of advice that you would give to a CFO as he or she prepares, the company for a debut bond issuance?
Thanks for that, Karan. And I think that's a very good question, and I could go on for a while about it. But I think if we were to just try and see how we could take a debut issuer and sell their bonds, I would like to make any CFO think of it from a investor's perspective. What are they really looking at? And I think inherently, even as advisors, we would say, okay, look, you've got the right credit quality to take you to the market, but the investor would look for things such as, are you a transparent, corporatized, well-governed entity with the right disclosures and consistency in disclosures? They would like to see more about, your focus on, and I saw there was a question on that posted as well, whether you have any commitment to sustainability or ESG. We are guiding clients. I think you can't take the credit out of it, but if you had the sustainability angle, I think they would be even more desirous on picking up that paper because they've been mandated. These fixed income investors have been mandated to try and support this cause. I think these two aspects are key. But three, as I mentioned on the earlier page of my section, lots of things need to go in there. So you need to get your rating done from an external agency. You also should have had some experience on the international loan markets just to be able to show the commitment to international investors such as banks that have actually lent you money. So I think in summary, I would always try and say, look at that slide. Those are the key angles. Obviously, we can look at adding more as we go through the process to make you more desirous from an investor's perspective.
Sure, thank you. There's a question again dealing maybe to both. Waleed first is really about corporate governance, transparency of financials. Again, with both your extensive experience across dealing across markets, across clients, how do you see that in Egypt when it comes to really the transparency of information, corporate governance measures, etc.?
Thank you. Look, it's a great question. I think this is one of the key themes. I think not only in Egypt. This is more. I think on the GCC, the wider region. This applies to so many players across the region. Governance, I would say, transparency, more in terms of governance, in terms of putting the right standards within the company, in terms of raising funds flow, how the funds are used, especially in terms of reporting. How are we dealing with the various stakeholders, especially the investors or the banks, in terms of sharing information, ensuring that the information is adequate and is verified, is accurate, is audited. So we see that this is having a huge impact on the way a company can tap liquidity pools, and the way a company can enhance its profile on the debt capital markets, or on the debt markets in general. So this is a key subject, and I would highly encourage everyone to go for it.
Okay, thanks. The one question, Waleed, for you again maybe is, let's say different sectors, if you drill down within Egypt. So any particular sectors you think would be challenged when it comes to accessing the debt markets, and equally any sectors which you think might be attractive for the bank and the institutional investor community today?
Look, as I said before, I believe there are a few sectors that are really kind of sensitive to the COVID-19 crisis. Of course, I'm thinking of the tourism, aviation, hospitality. All these have suffered and are expected to suffer worldwide, not only in Egypt. So Egypt is no exception. I believe these sectors will, feel the heat Hopefully, inshallah, over the next few months, it will ease up as we, progress in finding a vaccine. But clearly, other sectors that drive interest is, oil and gas sector. Despite the oil price, still see a lot of interest in the, as I said, midstream, downstream, petrochemical, manufacturing sector as well, telecom sector, of course. So quite a few sectors that have emerged in the pandemic as resilient or as a defensive sector, although they were not by the book called defensive sectors. But any business that could be digitized, any retail business especially. So we see a lot of appetite for the manufacturing industrial sector, as I said, services also. So these are quite a few.
Aditya, you have anything to add to that?
Yeah, I think the pandemic is we don't know when it's going to end, to be honest, and we all hope it's soon. But what this has definitely done is that it's thrown light on a, as we banks like to call it, the downside case, and none of us have actually had a chance to verify how down that downside case actually has been. So although Walid spoke about defensiveness or structures, I would like to look at it from a different way that, what about your market share? So if the entire sector has been impacted, if you had the market share, then this should be telling you that how do I plan for the future, knowing what has happened. That should easily tell you that you need to look at different instruments that buffer your capital structure. Banks do it with tier 1 and tier 2 capital. But what about corporates that we deal with? How do they look at it? And I think this pandemic has definitely taught some of our clients here that although they had the best market share, that now they're thinking, okay, the loan market was easy, it was quick. I didn't need to go through a whole bunch of preparation that we normally do with a bond mandate or a bond deal, but they're thinking about it now. So I think irrespective of whether you can go to the market today or not, I think this has definitely taught us the need to plan, and it could be 6 months later that you actually go out and do something. But these initial conversations are very critical to have, and I think that's what we've seen coming out of this pandemic.
Sure, thank you. Time for 2 quick questions. We talked about ESG initiatives. Clearly, that's a very topical subject. So how do you see the appetite for green bonds and indeed green loans as well in Egypt? And do you think that's a sustainable business model in Egypt and wider MENA?
Again, this is so topical at the moment, and I think people kind of mix and match a little bit of the ESG, the green, and we kind of mix it up with credit. So I think, as is every treasurer's dream and CFO's dream, is to get the best price, and this is what we are paid to achieve for them. I think the green angle is more of a philosophy that clients should have. You can't just paint yourself with an ESG broom or stick or paintbrush and expect that issuers would just accept it. But coming from a marketing perspective, if that's already a philosophy, you believe in sustainability, you've got the right governance and the green frameworks that are needed, I think for sure these large investors, as I mentioned, have pockets of liquidity allocated to supporting these initiatives and goals that corporates will sign up to or have a philosophy on. And therefore, it is going to be more and more relevant that people take this as a key work stream as they not only go to the bond markets, but just going forward. So I hope that answered the question, Karan, but ESG is meant to stay. It should have already been there, but I think investors now, when they put their money to work, will want to see more of it.
No, absolutely. There's a lot more allocation happening towards that.
Correct.
Walid, maybe the last question for you before I hand over to Ahmed is any thoughts on how pricing would develop over the next few months post-COVID?
Thank you. I was expecting a question on pricing. Look, if we look at the story over the last 3 months, we were, of course, shocked to see the kind of yields and prices. That was more, to price in scarcity of liquidity. I think 3 months back when everything shot up. The CDS has shot up, the yields on bonds shot up, etc. Over the last 3 months, a lot of tightening, of course, as the market normalized. We've seen those, high, crazy levels, tightening quite strongly. It's still above pre-COVID levels, but we are still seeing the story as improving, and you saw the CDS levels in the chart I showed earlier. It's also coming down. So I believe, although the pricing will still be high compared to pre-COVID, higher, should I say, compared to pre-COVID, but the trend should be tightening over the next few months. And of course, as we progress in our fight against the pandemic, and as we discover a vaccine, as we roll out the vaccine, as the numbers of casualties reduce, of course, the liquidity will improve, the pricing will even tighten more, and we will see lower kind of levels. So yeah, this is more or less in a nutshell the view.
Sure. No, thanks for that. Certainly the knee-jerk reaction is normalizing a little. Thanks for your time. I'll just pass it to Ahmed for some closing remarks, please.
Thank you all for being with us today. Hope that our esteemed audience found this session very informative. Special thanks to my colleagues Walid and Aditya for their time and insight. Actually, your views are highly appreciated, and it has been a great pleasure having you both with us today. Just a small update that attendees can reach us for any further queries or clarification directly through their relationship manager at Mashreq, who will respond promptly. شاكرين لحضوركم جميعا ومشاركتكم الفعالة. We look forward to see you all again in our next webinar. Stay safe, stay connected. Thank you all.